Aloha, everybody. TGIF, but maybe not following the market session on Friday. I have constantly posted about it on the new positions page the last few days, how something didn't quite feel right. I don't like that we're not closing near the high of the days. And even more annoyingly, in the chat room, I've constantly complained about how once we broke that 325 high, we just really can't get any real strength going in the past few days. And the inability to close at the high of the day following our break above those 325 high a days on a lot of these indexes. It's just something that I found very strange and problematic. And here we are on Friday, down 1.65% on the Russell 2000, and I'm not surprised. The good news is that while there was some damage out there, a lot of lost gains today, it overall hasn't gotten ugly yet. But there's enough damage out there in big cap leading stocks that look like they're breaking down from current patterns that they were trying to build to break out of, that I definitely am nervous here. I got a little fearful intraday even, and that could be a good contrarian indication that the market has maybe already seen its lows. The only problem is that the VIX was only up 10% today, and at one point intraday was only at 15. If it would have hit new highs above these March highs and then reversed back to close around where it opened, then I'd be like, yeah, what an excellent shakeout, But for now, the verdict's out. The Nasdaq was down 1.52%. This index is going into a neutral condition along with the Russell 2000. So the Russell 2000 overall, while we're in an uptrend, it has a neutral buy condition about it. Whenever we were in the neutral condition following the 325 day, we still had an overall buy bias because we keep getting new long signals. So that continues there. Nasdaq, similar situation. The Nasdaq is finding support at its 50-day moving average, intraday reversal off the low, so it's not ugly yet. So it's a neutral condition, heavier volume. Not quite sure what to make of that. You can see via stochastics and RSI and TSV and MACD, we're kind of just in the middle of the road. The S&P 500 actually was only down 1.13% today, but it's back below the 50-day moving average, back to a neutral condition. And its RSI, stochastics, and TSV and MACD now, along with that price action, it's kind of muddled. I don't see really any heads or tails of it. Dow Jones Industrial Average, similar situation, back under a neutral condition. And so we just are just going to bide our time and wait and see what the market wants to do in between these highs and these lows. So right now, we're in a pretty much, just basically going to do nothing holding pattern until we can break out above these highs or these lows. I tell you what, it's going to be hard for us to move, do anything with our current long positions. But the bottom line is heavily neutral right here. The only good news today is that the Dow Jones Transportation Average is only down 0.70%. Did not make a new intraday low and is showing positive support and climbing and making higher lows. Now we just need to see higher highs, and that would be a-okay. But overall, with the ugly day today, you better believe we had some full sells. CMPR is a full outright failure. M&K hasn't really failed yet. You can now go ahead and use the intraday low if you want to, but I'm all out of M&K 100%. AMWD, that is a fail, especially with it reversing all of those previous gains. I don't give a shit that volume was low. AMWD has broken below some key support, so it is a goner. I don't even have a position, never did, but I still track them like I would. TREX has also hit my final sell stop, which was below 50.80, so 50.79 I was out, but Trex now closing below the 50-day moving average is definitely a full sell on an end-of-day basis. LB was about the worst failure on the day. That is a very, very big, clear-cut, ugly failure. What is it, 4%? I think that's where I went long, was after this day, so 4% loss on the entire position. What are you going to do? And then NSP is a failure, already out of half of it, but the other half is a full sell. And then one new long was an immediate failure, GPX. And actually, I messed up, and in the morning was like, screw this. Got a good fill on it. Not going to set sell stops. Damn it, I was a dumb move. A big mistake for me. I wanted to give these guys, and it worked in one. So CNO was a new long, and I didn't set sell stops early on. And had I would have been taken out near the low of day at 17.33, and it's reversed back to 17.47. So that worked out. BJRI, let's say that I was seeing this, we were weak in the morning, might have set half here, And then the other half down here, as it is, this is where my sell stop is now, the low of day at 414. But it, reversed intraday off those lows, so I would have been shaking out a half of that position. And then what was the other one? OGS had got a great fill on that. Normally the rule is you don't buy it if it opens below where it opened the previous session. So with it at 42.55 in the morning, it was indicating like 42.47 and 42.60. I think it was like that. So I didn't know where the hell it was going to open. I thought, okay, it's basically going to open break even. Will open slightly lower at 42.47. So then I put the sell stop in below 42.01 at 42, and that thankfully didn't hit, so that didn't matter. But OGS, I did put the sell stop on immediately. So the only one that failed, so BJRI worked, OGS worked, CNO worked. The only one that failed was GPX. The final sell stop would have been at 35.86. It blew right past that, and I believe I got out at 35.12, 35.13. Prudent sell anyway because it traded all the way down to 34.92 at one point. So whatever. It's a little of a mistake, abuse of my methodology. Should have had a hard sell stop on the book, but no use crying over spilled milk. And then also GILD, kind of a full fail. With the remember I wanted to use the 50-day moving as final sell stop. Whenever I set it up like by here as the final sell stop. So it held that. But what I'm going to do is I'm going to sell 50% and then set the other sell stop right below that intraday low a day, and then I'll be out. PayC, this was a sell signal here, but I wanted to trade below the low day 30.09, so I put my sell stop at 30.08. It held it for 1 day or 2 days, but today traded below 30.08, so I'm out of half of what I had left to PayC. If you did not get out of it with that breach of that low, this is a 50% sell. And AMZN, due to the break of the 50-day moving average, closing near the low a day on above average volume, that is a 25% sell. There was a stock that broke the 20 that I wanted to show you, broke the 50-day moving average, but had an intraday reversal, so it's not a sell. And I wanted to compare that to AVGO. There it is, AVGO. So AVGO, for instance, broke the 50-day moving average on above average volume, but it reversed a little bit off its intraday lows, giving a wick. You can see Amazon's not really producing a wick compared to its overall intraday range, and is holding above support here, key support here. So what I'll do, move up sell stop right here, and obviously keep a sell stop right here for AVGO. And then CMGE, I'm all out of it. It took me out of my full sell stop, which is right below 2026. So, and I got filled shitty like 2018 or something like that. No, I didn't. 2026, I got filled like a 2021. Still a shitty fill, but overall, I still got out of the position, which obviously in hindsight now I don't want to be out. But CMGE is a 50% sell on an end-of-day basis because it's failing the low a day here on lower volume, still holding the lows here. You could go ahead and use 1970 if you want, 20 or 2021 now, and that's what I would do. I would move up your final sell stop to 2021. If it breaks below that, you're out. No new long positions, obviously, with all those sells, but oddly enough, we did get an add signal, AGEO. You can see a longer-term chart uptrend. You can see from the June and July lows, it's been very strong. But today, it actually confirmed the retake of the 50-day moving average on even stronger volume with a huge surge in BOP to a near max green level, and the stock actually went out near the high of the day. That's incredibly impressive for a session that was as bad as today was. So AGO is going to be a 2% add. Why? 1% for it being in my high price scan. So I got a high price stock scan that looks for stocks above 50 on huge volume, and then I have another high price stock scan that I'll scan on down days to see if any big cap stocks show up, and that has a price of over 100, and it has different requirements. So like this one wasn't in the one that has the stocks over 50 scan, but it was in the 100 plus scan, and basically all that is just looking for stocks that are above 100 that are up on the day. It's that simple. AGIO was in that scan, and it was confirmed in the price volume BOP scan, and I'll show you that scan I'm talking about actually. It's this one right here. Right here, there's 187 stocks that qualify. In this one, there's 83. This has got a 50, and it has like average volume. It has requirements. It has past requirements. This one, all you got to do is be over $100 a share. As you can see, everything's over $100. So if you're over $100, you're in the scan. That's where AGIO was. So it's in this one, price volume bop, 2% position. That is all. We shall see what this market wants to do on Monday. We are neutral, neutral, neutral.